What's up, guys? We're back. We've got another recap for you. I appreciate you giving me the time. So today we're going to go over EurCad. This was a short position that I took yesterday, June 24th. This was a D2 entry signal. And this is a really important trade for us to talk about, not just because it was a winning trade, but because today the same pair presented the same signal, another D2, off the same price level. So if you were paying attention yesterday, or if you were active in the VIP chat, you knew I had a short bias yesterday on EurCad, and you could have come in this morning a little bit earlier than I was awake, but you could have come in and if you're trading in the London session or whatever it is, you could have been awake and traded the same pair in the same direction, almost like a deja vu kind of moment. Now, the theme of the week, the theme of all my recaps recently has been that not every trade we take can be a home run. We're going to have to hit the Derek Jeter singles. Today, I was very grateful for this trade. Yesterday, I was very grateful for this trade. I'm going to show you here on the chart in a second how sometimes these reversals can paint and set us up for what looks like these unimaginable risk-reward opportunities, 15 to 1, 20 to 1. Of course, it can keep falling or keep rising, whichever way you're trading it. Of course, it can keep moving. But as traders, we have to remember that we can't try to take all of the meat out of every move. We have to be grateful for what the market gives us. And for me, I want to be blue way more than I'm red. So let me show you what I mean. If we look back, this is Tuesday, Wednesday, and then into today, Thursday, on the right side of the screen. You see it's separated by this vertical dotted line. You can see from the RSI high set on Tuesday into Wednesday, we created bearish divergence. That divergence sets us up for potential for a reversal. Not necessarily that we're going to break down and fall through the 800 EMA down here and fall all day. You can't assume that, right? But you can assume that once you have a high set and bearish divergence present, you might see this thing come lower. It could chop sideways. Of course, it could keep rising. But this is where, if you're looking for reversals, if you're paying attention to relative strength, this is where you can step in and actually take advantage of some of these pullback moves instead of just trading in trend, like you hear me talk about all the time. So notice in the third hit to the high of day yesterday, first hit was here, second hit was here, into that divergence. This third hit, that's where I was able to go down to the 1 minute. If we take a look where that circle is, you'll actually see even more bearish divergence. See in that circle how price is rising and the RSI here is falling? More bearish divergence there, where at that point, now with multiple time frames showing a bearish signal, it made sense for me to take some risk here. And that trade ended up working really well. And I was very grateful that it dropped to the 200 EMA right here. And that's why I was full out of the trade. I took profit at about 40 pips. I was very, very happy with that move because we know that sometimes these moves will not go all the way to the 800 EMA. It's just not going to happen. But when you can catch a move to the 200, take your profit and move on for the day in a pain-free trade, those are things that I like to be involved in because even with small risk at 10, 15 pips, I'm able to come in and get 40. That's good risk reward. Now, flip to today. Notice how price pulled all the way back, pinned the zone yesterday afternoon, and then actually sat there overnight, but it didn't go any higher. If you want to be really specific, you can even come in and draw divergence today right there. Now that divergence at the same price level that we were at yesterday signals to me, and this happened before I was awake, but that if we make a lower high off the divergence structure, which we clearly do right here, this is the lower high, then we could see it break the 50, which it does here, and come lower to the 200, just like it did the day before. Notice how after the first 50 break, really this was the first one, but I didn't like this one like when you're looking at this isn't after the lower high is already made. So you'd like to see that set and then a break. Watch how it kind of comes up, tries to get above again, and can't even sit through the 50. So that's the safest place to take your position and trade it to the 200. Now, if you look back to yesterday, what happened when it hit the 200? It literally stopped and bounced. Today, it fell all the way through, finally making that move to the 800. So even if you took the trade at the 200, you were still able to make money today, and maybe you left a little bit in as it held the 8 EMA, and you could have taken that down to the 800 EMA before 7 o'clock this morning. Yesterday, you could have stayed in this a little bit longer than I did and gotten out when it broke through the 8 right there, but I was very happy, like I said, to take it at the 200 because I know sometimes it'll bounce too. I don't like to see it, you don't see it sit there like that one does too often. Normally, they either go through or they bounce, and here, today, it goes right through it. So I think going across from Wednesday now and into today on Thursday, I think it's really important just to drive home the point that you don't have to hit home runs, right? And if you can consistently come up to bat and boom, hit the single, boom, hit the single, That's what consistent trading is built on. It has nothing to do with coming in and being able to hit a 13-to-1 risk reward trade. Nothing, unless you can do that over a consistent period of time. So for me, because of volatility right now, right, with the stock market making almost all-time highs, yet unemployment continues to rise, more and more people are waiting for more stimulus. It's like the world is almost moving in two different directions. With so much volatility there, you also have the China stuff going on where they said that they're not going to fulfill the deal, but then they said they might fulfill the deal. It's everybody just talking. So it's just creating more volatility. And in situations like this, it's important for us to be short-term focused. We don't want to be looking for swing trades, leaving ourselves exposed overnight to Trump tweeting something or China making a decision while you're asleep and then it impacting your trade. To me, for me, and I think for a lot of you guys that watch my videos, it makes a lot more sense for us to get in, get out, take the bag, and come back and do it again tomorrow. So I wanted to really show you guys here how you're able to not only identify the reversal signal and take it for a quick pain-free trade down to that opposite EMA, but you're able to then use that same idea the following day to come in and trade it in the same direction and make even more money if you are awake, of course. So I hope that helps. I hope it gives you a little bit of clarity into the D2 signal. If you have any questions, drop a comment down below. You know, I'm more than happy to clarify. If you want to get involved in the team, I'm going to put some links down in the description of this video so you can read testimonials from other real traders. And then even there, you'll be able to check out our products and courses and see which one would be the best step for you to join the team with. So again, any questions, reach out to me via email, drop a comment down below, and I'll see you guys in the next trade video.